Noah, the bar was like right up here. And these banks, JP Morgan more specifically, skipping over it quite impressively.
Yeah, I mean, I think there, as the other speakers mentioned, I think there are three real drivers here, right? It's the market environment, it's the macro backdrop, and it's tax policy. And I think, the market backdrop is probably the most tricky one to extend going forward, but certainly the pickup in volatility drives a pickup in dispersion. Price dispersion has been really muted in 2017, and to see it improve, we think can extend. Fundamental dispersion, revenues and earnings, all suggest there's an alpha market out there, so I think that can extend.
The real story is a pickup in equity vol. Don't see it in FX, don't see it in the bond market. Do you anticipate that's going to change, Noah?
Shifting over to other markets? Or
yeah.
They should, vols tend to be correlated. Look, there were some problems particular to VIX and vol in the beginning of the year, but I think that's kind of moderated a little bit. So yeah, you would expect that to spread. The things that drive equity vol should drive vol more generally.
Any reason this should bleed into rates, George?
We would love to see it bleed into rates, but however, if you actually look at the bond market,
far.
We've been kind of stuck in a tight range between 275 and 295, and we really haven't broken out of that. And in intraday, you actually do get a decent amount of volatility. Even in equity space, you get a lot of intraday volatility, but it doesn't really feed through to the implieds and overall realized in vol. And then I think it really does require us to break into 3% on the 10-year.
Yeah.
And then that will get things shaking. Also, the LIBOR move has been very sticky. If it keeps going higher, then I think that's going to introduce some vol as well.
We'll try and spend a little bit more time talking about this a little bit later, the shape of the Treasury curve. But so many people focus on that shape of the Treasury curve and say, well, it's so flat, how do the banks make money? And the banks have been making money because if you borrow from a bank, they'll pass on the higher rates. If you deposit at the bank, they won't pass on the higher rates. I sense from Gerard Cassidy that deposit beta story turns this year. And if it turns, then the shape of the curve becomes that more important. Are you expecting it to steepen at all?
Actually, ironically enough, the banks have a steep yield curve. Right? they have their own internal steep yield curve, and they've been enjoying this for the past decade, roughly. And we do think that there's going to be pricing power coming to the front end. And we're starting to see that already in the money market space. And eventually, money market funds will start to kind of rob and take away some of the deposits that the banks have been enjoying for over a decade.